Hello, everyone. Hope you're having a wonderful day. As you all know, tomorrow's a day off, so lots to be excited about. I'm Kareem from Expat Republic. Some of you know me, some of you not. I run Expat Republic, and we are a media company based in the Netherlands, and we basically do all kinds of cool content, webinars, articles, drinks, whatever. Everything. We basically provide all this kind of information and work with loads of partners to kind of bring you all the information you need to settle in and live and have a great life in the Netherlands. When you've moved from abroad, you start off kind of from square one. So we're trying to not make it square one, maybe square one times a bit more. So lovely to have you all today. A lot of you may have kind of moved here. You looked for it was probably a nightmare to find a rental property that you like, and it was tough. And then you decide to say, look, let me stay in the Netherlands because it's just a nice place to live. You like your job. Maybe you meet someone nice. You have a nice circle of friends. Got some hobbies. I play squash myself. Not very good at it, but I'm still doing my best. But it's always good to exercise it. And so, yeah, so a lot of people, they think to themselves, look, I'm just like flushing money down the toilet with rent, kind of lighting my hard-earned euros on fire. Like, why would I do that? It's maybe counterintuitive, and maybe if you're going to stay here a long time, probably more than 3 years, it already kind of makes sense to start looking at buying a house. And because of the housing shortage, the Dutch government and many developers have started to push for new build. There are a lot of opportunities for a new build. I personally, I bought a new build just because energy label is better. Repairs are less. It's more energy efficient. It tends to be sometimes in quieter neighborhoods. If you really want to have a life, you can't be always in the downtown hustling, bustling of Amsterdam when things are all crazy. I personally would go nuts. And to help us today, we have an incredible team, Egle and Robin from Mr. Mortgage. Mr. Mortgage is really an amazing mortgage broker. They work with tons of lenders. They are specialized in working with expats, and they found like a bunch of lenders that really tailor to the needs of expats because they have different needs and all kinds of stuff. Service in English, really an incredible company. They've been around for a while, and they have a collective, I don't know how many decades of experience with their team. Really lovely team, very helpful hand. And we're really grateful to have them today to tell you a little bit about new build properties, the mortgages with the new build properties, pros and cons of new build properties. I don't see any cons, but I'm sure they'll help you there. Without further ado, I hand it off to our really amazing speakers, Egle and Robin. Thanks so much for being here today. Just some house rules. If you guys have questions, just blast them away in the chat or the Q&A, and then we'll answer them at the end. And then we'll take it from there. To you, my wonderful speakers, thank you so much for being here, and looking forward to hearing the what it's about, the new build properties.
Of course. Welcome, everybody. Thank you for joining, Karim. As always, thank you for hosting and the fantastic introduction and the kind words. Always very exciting to speak in one of the webinars that you schedule. So that's very good. And indeed, today we're going to discuss the wonderful world of mortgages when it comes to new build properties. So Karim already has a new build property as well. My first home that I bought was also new build, and it definitely has a lot of pros. Some cons, sure, as well. It's all depending on your personal situation in the end, right? Does it match you? Does it match your plans and wishes and future goals as well? So that's what we're going to discuss today. What things to consider when it comes to buying a new build, how does your mortgage work, all of that. So you're at the end of this webinar, the idea is that you know a bit more, that you're a bit wiser when it comes to options for new build. And of course, like Karim already mentioned, I'll go through the presentation today. When you have any questions, feel free to pop them into the chat in the Q&A, and at the end of the presentation, we'll discuss questions. Now, when it comes to general questions, always throw them in there. When it's a very specific personal question about calculations or something else, or about your personal specific situation, feel free to pop them in the chat as well. But it might be that it makes more sense to schedule a call one-on-one, so we just can go through your personal situation. Now, with all that being said, and indeed, without further ado, let's dive into this. buying a new build property in the Netherlands, obviously. Now, first, before we dive into this, I want to introduce my fantastic team. I'm the second one from the left. You can recognize me by the beard, I wanted to say, but on the left hand, you see Ceci Yilmaz, my colleague as well, one of my fellow financial specialists, as well as on the far right, Lisa. Yeah, together we try to be kind of your mortgage Google. Anything you need to know about mortgages, we'll make sure that you know everything always, whatever your situation is. And of course, not to be forgotten, is Egle, our fantastic growth marketeer that helps us getting out there, get to know you guys, of course, and to help you to find the best solution for any of your mortgage questions. Now, what is Mr. Mortgage? What do we do? We are a brokerage firm for expats specifically. And the team, all of us in the team, we have some experience with either living abroad, coming from abroad, or being raised or living in very international surroundings as well. So we know the struggle that there is, that when you want to buy a property, you want to get something done in the Netherlands. The Netherlands is kind of like, in Dutch you have this saying, that's a kind of a paper shop. So there's a lot of paperwork going through. And you just have to know your way around and how to arrange things, how to deal with different admin stuff, and also just to get to know the process of buying and financing a property. Now, that's what we are here for. So we know the struggle, and we help to guide you through everything. And then what gets us our blood flowing, of course, is to help you find a property that you can live in, your new house that you want to buy. In this and to hear your specific stories, right? How did you get to the Netherlands? Why do you want to buy a house here? What are your future plans as well? Now, any information that we share is obviously in English. The same goes for any bank document that you will have to sign when you secure a mortgage. Everything is in Dutch, but we'll supply you with translations to make sure that you actually know what you're signing and what you're getting yourself into, of course. Now, we are an independent broker. We work with over 30 mortgage lenders, mortgage providers, banks, etc. So for us, it doesn't really matter if you go with bank A, B, or C, as long as we can arrange the best conditions and best interest rates for you. So we have a sole focus on you. And we do have a special position with some of the banks, some of these lenders. And what this means is, because we are this specialized brokerage firm for expats and internationals, some banks do understand that we have knowledge about this specific niche market. Now, usually some of the banks, they have higher interest rates when you have a passport from outside the EU, or you have income from abroad, for instance, or when your income is not in euros, but for instance, in a different currency. Now, there's a lot of banks that do not really understand, do not want to work with that, but working through us, then you have a better option. And sometimes we can even get a better interest rate with some of the banks because we are this expert firm. Now, what do we do? Everything about mortgages, really. So anything when it comes to residential mortgages. So when you buy a property to live in it yourself, whether that's an existing home or, of course, the new build. Buy to let. So when you want to buy a property to rent it out, so an investment property, can also definitely be investment new build properties. Refinance and increase. So when you already have a property and want to benefit from a better interest rate, or you at another bank, or you want to have a different type of mortgage, or you want to increase to maybe do some adjustments in your house, for instance, or to get equity out of your property to use that to invest in a different way. Different options there. Keep to let, when you already own a house and you want to move to a next one, but rent out your current house, also a very nice option. Or a more tailor-made solution, such as what happens if you divorce. Or the more positive counter side from that there is that when you want to add somebody on your mortgage, of course. Increase, renovation, anything. So basically, anything that you want to know about your mortgage, we can help you to get an understanding there. Now, before we start, and Karim, I need your help here. Could you launch the poll? So maybe, can you tell us something about your situation? So where you are in your house hunting process. There you go. So where are you in the buying process? Are you actively looking to buy? Do you plan to buy, let's say, sometime next year? Or simply you don't really know where to start, which makes a lot of sense as well. Are you already viewing properties, so actively looking around? Or do you prefer to rent, which is also a very valid option, of course. And then maybe it's more for the future that you're attending this webinar. Basically, to kind of get an understanding of what your situation is, let me give you a bit of time still. So are you actively looking? Are you planning to buy in the near future or a longer future, let's say next year or after? Don't know really where to start. Attending property viewings already, or do you prefer to rent? Now, Karim, I hope that we got some input.
We sure did.
Very good.
Let me.
Curious.
There you go. There's the results.
There you go. So the majority, well, 33% are actively looking to buy, plan to buy next year, and don't know where to start. Very good that you attend here as well. Attending property viewings already, very good. And nobody prefers to rent, which kind of makes sense that you attend this webinar as well. So
it's a smart group, Robin. It's a very bright, financially smart group. That's what I like to see.
That's very true. So I don't have to explain to everybody else that prefers renting that. Well, it can if it makes more sense in your financial situation. But like Karim already mentioned, when you buy an existing home, then after about 2 years, when you compare it to renting a property, after 2 years, you already have your investment out of it. Now, you already earned it back. Now, when it comes to new build property, it works a bit differently, but also actually you have less investments at the start usually. So, let me be more specific and just take you through this presentation. So, thank you for filling out the poll, everyone. So what can you expect today? Reasons to buy or invest in new build property, of course. Unique benefits of new builds, the process and timeline you can expect, practical overview of what a new build mortgage would look like, and the next steps to start this process. All right, now with all this preparation done, let's get into it. So reasons to buy new builds. First off, fixed price and no overbidding. Now, usually when you find a project from a developer, there are fixed prices. Now, it could be that you have to be part of the lottery, so that you register in a project and that you say, well, yes, I'm very interested in this property. And then there might be a lottery that a month later you'll hear if you won the lottery there and you can buy one of these properties. But what the very, very nice thing is there's a fixed price. There's no overbidding. There's no bidding going on with new builds usually. Endless options. Well, yeah, you can adjust your property however way you like. So that kind of coincides with the customizable interior. So when you buy a property, you basically buy walls. And then you can decide, if you're early on in the process, you can decide where you want to have dividing walls. Or you can even say, well, I'd like to have my bathroom here or there. Or one of the things that I also noticed is that you can even decide where you want to have your power sockets. And if you want to have them upright or laying down, anything. You can tweak it to any way you like. And as Karim already mentioned correctly, it's very energy sufficient. And that's not just something that you usually have, but it's actually by law arranged that any new build property have to have an energy label of A++. It's very energy sufficient. A couple of benefits there. The most obvious one is that your utility costs are relatively low. And then also some of the banks give a discount on the interest rate when you buy a property that's more energy sufficient. Additionally, as of the start of this year, the government actually gives you a higher mortgage capacity when you buy a more energy efficient property. The consideration there is that they think, okay, sure, if you buy a property, you can afford a certain amount of mortgage based on your income and the interest rate that you pay. But then basically you have some money left because your utility costs are lower. So therefore your mortgage capacity is a bit higher. And the government wants to encourage people to buy energy efficient properties to make it better for the environment, basically. Now, you also have lower closing fees. We'll dive into this a bit more later on as well. But basically what the main consideration is the transfer tax. So a transfer tax is is a tax that you pay the tax authorities, obviously, over the transfer over ownership. So when somebody is the owner and you'll be the new owner, then you pay transfer tax. Usually that's 2% when you buy a property for your own use. When you buy new build, nobody ever owned it. You are the first owner of the property, so there's no transfer of ownership. Therefore, no transfer tax. And 2% is a large amount. So if you buy a house for 500,000 euros, for instance, 2% is 10,000 euros right there. Now, if you buy a new build for 500,000 euros, no transfer tax. So no 10,000 euros. So that's quite a big save right there. tax-deductible fees. That has everything to do with any fee that you pay for your mortgage during the mortgage application process. This applies for new build and existing homes. So, for instance, the fee for Mr. Mortgage, your financial advisor arranging your mortgage, is tax-deductible. So you get back about 37% later on. Now, low maintenance, obviously, it's a new property, so everything is spick and span and all new. So the maintenance will be relatively lower. And the flexible rental market, that kind of depends on where you buy, but usually you can rent out the property. So if you want to invest in real estate and new build real estate, there's also a nice option right there. Continuing. So what can you expect when it comes to the timelines? Let's say you start, well, this month, May 2024. First step is the financial analysis to check your mortgage options. So that's what we do. We do a thorough financial analysis to see, okay, what can you get, what makes sense in your financial situation. Not only what can you get, but more importantly, even what makes sense in your personal situation, right? So I can tell you anything about your maximum mortgage, but the monthly payment, you still have to be able to comfortably pay that. Now, then when you buy a new build, you sign a purchase agreement confirming, yes, I want to buy this house, and yes, I want to have it built, or apartment, of course. Then select the option for additional work. Like I mentioned before, there are additional power sockets, or maybe you want to have an additional bathroom there, or you want to have your kitchen upgraded, all of that, the walls adjusted, anything there. When that's all done, then you start, when that's signed and everything is clear, then you start collecting your documents for the mortgage application. That is nothing too invasive, really. We don't need a birth certificate or something. Basically, there are very basic things like passport, salary statements, of course, contract of employment, or if you're self-employed, the results of your company over the last year or years. A bank statement, things like that. It's very basic, really. Then when we have all the documents ready, we'll discuss the mortgage setup. So what makes the most sense to you? Well, how long do you want to fix your interest rate for? Do you want to have it fixed for 1, 5, 10, 15, or the full duration of the mortgage, 30 years? That's also a possibility. We'll see what makes most sense to you, and what our advice is as well, what our expectation is of the rental interest market, to know exactly, well, this is the right information so you can make a valid decision, and we'll discuss that with you as well. So we'll not go with the most obvious option right away. We'll first test it with you and kind of trigger you as well to find out, well, what is the best option for you in the long run as well. Not only now, but for the next 5, 10, 20 years. The mortgage will get approved, of course. That's what we do. That's the main goal, of course. First, to get you fully informed about what you can get, what makes sense to you. And then when everything has to be arranged, we'll take care of that. And usually a mortgage application, I know if you go to a bank directly, it usually takes about 4, 5, maybe even 6 weeks. Not 100% sure what they do the rest of the time, because we streamlined our process in such a way that we arrange a mortgage usually in about 1, 2 weeks, 2.5 if it's a more complicated situation. But we do a very thorough prep work, so we just make it as streamlined and smooth as possible during the moment that it's the most exciting for you. Do you get the mortgage? Before we apply for the mortgage, we already know that your mortgage gets approved, and we want to give you that security as well. So that's all set. Then your mortgage is arranged, everything is done. Then you'll go to the notary to sign the mortgage deed. This basically confirms that you have a mortgage to buy or to finance the property that is being built. Right away, you're already part owner of the ground. Part owner, if it's a house that you'll have built, then you're owner of the ground. If it's an apartment that you have built, then you're part owner, just like everybody else in the apartment building. That is also when the mortgage starts, but you don't have the keys yet. So how does this work? Your mortgage will be put in a so-called building deposit. This basically means as much as that, let's say you buy a house for 500,000 euros. The 500,000 euros will be put in a building deposit. Part of that will be paid to pay the ground. And from that moment on, you start paying your mortgage. That gradually builds up, so you don't pay the full amount right away, but it gradually builds up. Now, every time, how does it gradually build up? Every time that the project developer starts a new phase, then you pay that amount and it gradually builds up. But I will get into that more specifically. So what are unique financial benefits? There's a couple of them. The most important thing is what I kind of already mentioned is the Koper. So Koper are the buyer's costs. So when you buy a property on the left, you can see the Gerard Douwstraat, one of the examples, now available for 600,000 euros. Koper, KK. This means that all the fees are paid by the buyer. What I mean by that is the notary cost for the transfer of ownership. And that's one thing, of course. It's about 900 euros usually. And most importantly, the transfer tax. That's also a fee that has to be paid by the buyer. It's when you buy an existing house. Now, when, for instance, Hyde Park, a new build project in Hoofddorp, there it says VON, and that in Dutch says Vrij op Naam. This means that you don't pay transfer tax because there's no current owner. That's what Vrij op Naam means. So it's definitely a unique benefit right there. So here's an example for instance, 500,000 euros purchase price. On the left, you can see existing home, Kosten Koper, KK, so buyer's cost. And on the right, you can see new build, Vrij op Naam. Now, when it comes to the transfer tax, it's 10,000 euros, 2% of 500,000 euros. On the right, you see new build, exempt, so you don't pay that. Now, on the left, you can also see, or 52,000 euros. Now, what does that mean? When you buy an existing home and you use it for your own personal residency, then you pay 2% transfer tax. As long as you're over 35, by the way. If you're under 35 and you buy less than 510, then you can be exempt from transfer tax if you didn't use that before. So that can be very nice as well. If you have questions about it, your specific situation, schedule a call and we'll discuss it. But if you now buy an existing home that you want to rent out, so buy to let in investment real estate, then the transfer tax is not 2%, but it's 10.4% if you don't use it for your personal residency. So 10.4%. So when you buy a house for 500,000 euros, you want to rent it out, then the transfer tax is 52,000 euros. So it's quite hefty. Now, when you buy a new build that you want to rent out, still there was no previous owner, so you don't pay that transfer tax. So that's a very big financial benefit right there. Now, real estate agents usually charges about 600 euros, 6,000 euros, or a bit over. It's about 1.2% usually. Kind of depends on what real estate agent you work with, of course. New builds, there's no real estate agent required, so no cost right there. Now, the notary, there you sign two. If you buy an existing house, you sign two deeds. One is the mortgage deed, like you have with new build as well. That's about 900 euros. But when you buy an existing home, you also sign the transfer deed. Transfer of ownership, also about 900 euros. So it's higher cost. Now, when you buy an existing home, the bank also wants to know, well, what's the actual value of the property? Because you put in an offer for 500,000 euros, but the bank also wants to know, well, is it actually worth 500,000 euros? Now, this valuation report is also for you because you have a confirmation of the value and all the details of the property. And that is about 850 euros. But for new build, that doesn't apply because, for one, there's no property yet, so there's nothing to evaluate. But on the other hand, also anything that will be any cost that you have to buy the ground and have the property built is all included as automatically value. So that's very nice. So you don't need a valuation report, and the bank guarantee is also not required with a new build. Existing home, at some point you have to secure a 10% security deposit. That usually doesn't apply with new build. So in comparison, you pay significant less monthly payments of buyer's fees when it comes to new builds. Right, this is an example like we just discussed as well. Now, one thing, well, not really how we discussed it as well. This is an example of what your mortgage could look like. So let's say the property price, the purchase price is 480,000 euros. Now, the additional mortgage, what we mean by that is the additional work that you have done. So you buy the walls, etc., and maybe a kitchen is already included, or you want to have an upgrade of the kitchen and the bathroom and a nice floor, because usually the floor and the walls are not finished. So you can consider, well, do I want to have a wood floor or a PVC, or do you want to have this very cool, like, flowing floor, whatever you want to do? You can all include that in your mortgage as well. Whatever you want to do there, that's all put in a so-called building deposit. Everything that is fixed to the house. So if you want to have a very fancy design couch, it's not fixed to the bank, so to the house. So therefore, it's not increasing value, and therefore it cannot be included in the mortgage. But anything else, so paintwork, flooring, a new kitchen, bathroom, like I mentioned again, they come back. the power sockets, everything can be included in your mortgage as well. So then the total mortgage would be 500,000 euros. Closing fees, you don't have that in the sense of transfer tax, but there is the mortgage advice from Mr. Mortgage, of course, the mortgage deed at the notary. So therefore, your total input of personal savings at the start would be 4,299 euros, as opposed to approximately 20,000 euros when you buy an existing home. It's a massive difference right there. So you have a tax benefit on the interest rate that you pay. It's a big benefit right there. So that's when you have a mortgage of a property that you live in yourself, you have a tax benefit on the interest rate, part of the interest rate that you pay. You can have that back every year. Then you get a lump sum. Everybody did their tax declaration 2 months ago. So March, April, everybody did their tax declaration and then state, well, this is my mortgage. And then in June, July, the tax authorities pay out your lump sum tax benefit for that year or the year past. Or if you say, well, no, I don't want to have it per year. I actually want to have it per month. Now, how this works, you only have to apply for it once. And you still pay your standard monthly payment to the bank at the start of the month. Then 2 weeks later, the tax authorities transfers your tax benefit to you, spread out over 12 months. Now, there's no financial benefit if you have it per month or per year. It just depends on what your financial household and your bookkeeping allows you to do and what you feel most comfortable with. Both is possible. Now, I just mentioned that you have a building deposit. So you buy a house for, let's use the example of just now. You buy the house for 480,000 euros with 20,000 euros additional work. So a total of 500,000 euros. That's put in a building deposit. Then every time, well, let's say your interest rate is 3.7%, right? So that's the percentage that you pay the bank. Now, on this building deposit, this is kind of a savings account in your name. So basically, you get 3.7% interest on your building deposit as well. So that cancels each other out. So as long as you didn't use your building deposit at all, you only pay repayment of the mortgage. So then when you do the first payment out of your building deposit, meaning you get an invoice from the builder, you send that to the bank. The bank then checks, well, hey, is this actually for the property? Checks it, confirms, and then the bank will pay the project developer. Why they do it like this and why don't you get direct access to it is they just want to be sure that you actually use it for your house, that you don't buy a very expensive Lamborghini later on and say, well, hey, look at this nice Lamborghini here. I have a very nice cool car, but then your house cannot be fixed, right? So that's what they want to be sure. So send an invoice to the bank pays the developer, and that's it. Now, when an amount is taken out of your building deposit, you still get the interest rate, but the interest is a bit lower because your building deposit is a bit lower. So then that means that your monthly payment increases a bit. So every time that a payment is done out of your building deposit, your monthly payment increases a bit until the building is done and you start paying the full amount of your mortgage. So it gradually builds up. Now, to skip to the fourth bit, actually, and I'll get back to the third, you can borrow an additional amount to finance the mortgage expenses during construction. So to a certain extent, I just mentioned, so your monthly payment build up on your mortgage on the new build, but you cannot live in it yet, right? So during the construction, you still have your own house to live in as well. To a certain extent, and if your income allows it, of course, you can borrow an additional amount to cover those additional payments as well. So to kind of reduce the amount of double payments that you have during the construction. Now, some banks offer a discount on the mortgage rates. That's the third point right there. And what that means is that some banks increase or want to encourage people to buy properties that are energy efficient. So they will give a discount. Now, as mentioned before, we basically work with all available banks in the Netherlands. Some banks give a discount, other banks do not. And we always check what the best interest rate is, of course, including this benefit. So it could well be that the best interest rate is with the bank that doesn't have the discount, but still has a significantly lower interest rate than another bank that has the discount. So this is considered there as well, but definitely very interesting to consider. All right. How do new build mortgages work exactly? Now, let me tell you. So here, this is kind of a depiction of what it could look like. Property price 500,000 euros will stay in the same range, of which 175,000 euros goes to the ground. The starting date of the mortgage is September 2024. It's a couple of months from now, and you become the owner of the ground, and that is, as mentioned, 175. So you have a total mortgage of 500,000 euros. Now, from this mortgage used for the ground is 175. Available for the rest in the building deposit is 325. So that's for the building of the property. Now, the interest is paid over the total mortgage, but you get an interest on the deposit as well. So therefore, strictly speaking, the interest is paid over the amount that's used from the deposit. That's where you actually start paying interest over. Now, what is a nice thing is at the start from the mortgage, your interest rate is already tax deductible for the full amount. So that's very, very nice, of course. Now, the interest rate that you get, as mentioned on the deposit, that is put into the building deposit. So that's why it's leveled out and cancelled out during the start of your mortgage. Now, you can see it right here, the example. So you used from your deposit already 175 for the ground. Then when you do an additional payment then of 25,000 euros for the first phase, for instance, then used is 200,000 euros and remaining available is 300,000 euros, still adding up to 500, of course. Kind of a depiction of how this works and what it looks like. Now, throughout the whole process, of course, we'll guide you through this as well. So not only in the mortgage application process, but if you have any questions during the construction phase, you can always reach out to us if you have any questions about this. Now, what do the monthly payments look like of a new build mortgage? Let me show you. Example of a mortgage payments for 500,000 euros mortgage. Now, at the start of the mortgage, the monthly payment is about 1,268 euros. So this is where you only pay, where you have paid the ground and you only pay the interest of the amount that's already used in the mortgage. Now, then gradually it starts increasing. So let's say it's about 100, 150 euros per additional payment per phase that the developer continues the building. And then after the construction is finished, then the total payment is 1,976 in this example, of course. So it gradually builds up. So you can see kind of where the difference is. So it's about 700 euros difference where you start and what the end amount is. These are the gross payments, by the way, so the tax benefit is not included here. And that very much depends on the specific property, of course. But when we guide you through the process, we'll also always give you clear insight what the gross and what the net payments are, of course. So what are your tax benefits right there? Now, what I mentioned before is that you can borrow a bit more to part finance the double cost that you have during the construction, and that's up to 4% of the property price, including the additional work that you want to have done. So therefore, you can borrow a bit more. That means also that your monthly payments are a bit higher, but then you can cover. So at the start of a mortgage, then you can basically say, well, I don't have any cost. And after 15 months, the monthly payments, then you used up this 4%. So then you do start paying. So your monthly payments are a bit higher, but then you don't have these double costs. If you don't want to do this, then you have to finance these double costs out of your own pocket, of course. So we can see what are the pros and cons here as well. We don't just go blindly, well, let's do this. We'll make a meticulous scenario and analysis of what your situation allows you to do and what makes the most sense in your personal situation as well. New build property projects in the Netherlands. Now, of course, it's important to know where you can find these properties and where can you find the projects to look into. Now you can see that here, for instance, in Amsterdam, there are 39 projects for sale, and in the Netherlands it's 1,588. So there's quite a few of them are available. Now you can of course use Funda to look into new builds, but there are also other websites to use. So for instance, nieuwbouwnederland.nl or nieuwbouw.nl. So those are all new build properties in the Netherlands that you can look for to find in the area that you're looking for. You can find the new builds that you want to move into or you want to check out. Now, this is kind of this was the basics of mortgages for new builds in the Netherlands. It was a lot of information, I know. If you have questions about it, feel free to pop them in the Q&A. And of course, if it's a personal situation for you, you can always schedule a call. It's always the introduction call is always a free call. It's about 10-15 minutes basically to get an understanding of your situation. We will do a financial eligibility check to see, okay, sure, what is your capacity basically, and then we'll start. The next step is the financial analysis. You can always schedule this call. Also, if you read something online, you think, well, hey, this doesn't really make sense. I'm sorry to say that there's a lot of information online that doesn't really make sense. So you can always check in to have us debunk the information or to kind of nuance what that means for you personally. Now, I'll give it now to Egle. I noticed that there's a couple of questions in the Q&A and in the chat, so take it away.
Hi, hello everybody. So I already answered one of the questions, which was related with the property transfer tax for investment properties, and you already mentioned that there is no transfer tax for it.
Nope.
For newly built. So I will first start from webinar chat, and the question is, how does the interest on building deposit works if we build our own house?
Yeah, I understand. Very good question. Thank you, Shazad. It's the same way, basically. If it's a project development or you have your own house built, the building deposit works the exact same way. So basically, the total amount will be put in a building deposit, and then you send in an invoice or a receipt, and then usually the bank pays the builder, that built your house then. Or in a specific, if that's not an option, then they'll transfer it to you, and then you can pay the builder. That kind of depends on the bank and the project that you're in, but basically the process is exactly the same.
Thank you. Can I get tax return on deposit if I build a house?
Yeah, also a very good question. So yes, the thing is that it's not necessarily on the building deposit, but it's on the loan. So let's use the same example. You have a mortgage of 500,000 euros. Then you pay interest over that, even though the interest is cancelled out by the interest rate that you get over your deposit, but still you pay interest for the tax consideration. So yes, during the building of your property, even though you already have your own property now, so you already own a house and you you have a new property built, both of the interest rates are tax deductible. Yeah.
Okay. How long do I have to wait for the building to be ready?
Yeah, that depends. If you have a property ready, then it can be done in, let's say, half a year. If you buy into a larger apartment building, you're very early on in the process. That's what I did in 2015, I think. I registered in a new build property, and then it was delivered in mid 2017. So I had to wait 2.5 years. But it was a large apartment building, so it can very much differ and where in the process the developer already is, and if there might be a setback or it goes a bit quicker. So in the range of 6 months to 2.5 years, depending on how large the property is that is you're building, or how large the apartment building is, of course.
Another question. With the keep to let. If I take a mortgage for newly built, however, once it's built, my situation changes and I would like it to be possible, and what additional cost might be involved?
Yeah.
So
yeah, you can. So thanks, Julia, for the question. So yes, you basically what you can do is arrange a regular mortgage throughout the building process, and then when the construction is done, a lot can happen in a year or two, right? So if we look back 2 years where we were then, the whole world looks different, and maybe you had a different personal situation as well. So when the construction is done, you can always decide what you want to do. Either you want to sell the property, you want to move into the property, or you might want to rent it out. Now, if you want to rent it out, of course, for one, the municipality has to agree to it. If you buy an apartment, then the homeowners association, that's the association of all the homeowners of that apartment building, also have to approve that you're renting out. Usually that's already written up in the bylaws to check if you're allowed to rent out the house. If that all checks out, then you can convert your mortgage from a regular mortgage into an investment mortgage. The cost considered in that, it very much depends as well. Basically, you have the same cost to adjust your mortgage, so the mortgage brokerage fee and the notary fee, so that's about 4,000 euros, let's say. And then it depends on what bank you go with and how much you repaid. So a regular mortgage for a property that you move into, that you live in yourself, you can finance up to 100% of the property value, considering that your income is sufficient, of course. With an investment mortgage, it works a bit different. Usually that's about 85% of the property value in rented state. Property value in rented state is a bit lower than the regular value, 85% of that. So you usually, when you buy a new build, investment property, excuse me, you have to input some of your savings. Now, this is where a new build can come in very handy as well, because during the construction, the expectation is that the property value increases. On the other hand, you also repay your mortgage. So as time goes by, the equity that you build up without even living in the house already builds up right there. So it could well be that, for one, most probably you wouldn't have to input as much savings as otherwise. And maybe nothing at all, considering the value increased and you repaid on your mortgage. So that depends on the specific situation there. So yes, you can sell, live in it, or rent out the property later on. Be sure to check in before you do so, of course.
Mm. Is there any tax benefit on interest rate for investment mortgages?
No, there's not. No, the tax benefit is exclusively for properties that you live in or planning to live in yourself. Yeah.
Okay, thank you. And what happens if a construction gets delayed?
Yeah, nothing really. So yeah, the construction period is longer. So that for you basically means that your double costs are longer. So it takes a longer time before you can move into the property. So that means that you have to keep your current property for a longer period of time. Regarding your mortgage, then nothing else changes really, but you just have to be more patient, and you have a longer time of double cost there. Still, the interest rates are still tax deductible, so you still have that benefit for sure.
Why are some land projects K.K and some others are
VON.
VON, yeah.
Yeah, so KK is for Kosten Koper, so the buyer's cost, and the other ones are Vrij op Naam, VON. So usually when there's a land or a project KK, then it's already a property that is being renovated, for instance. And then even if they take down the whole property and build it new, then still there was a property there. So that is then being owned by somebody else, and they sell it to you. And Vrij op Naam, VON, that is when the property has never been owned by anybody else, so it's a new build property. So usually that's the difference between a renovated property and a new build property. Or, by the way, so sorry to add something, sorry, Egle. Or it could be that the property is already being built right now, and somebody wanted to get into buying it and having it built, and then somebody said, well, okay, sure, this doesn't work for me anymore, and then they sell it, a partly built property to somebody else. So then they are already part owner of what has been built, so then there's a transfer tax as well. Again, check in with us if you have a specific situation to yours, that applies to you.
So another question, and it's also good to know for everyone, do we operate in Eindhoven area? So
yes, we are located in Amsterdam, and even though there is kind of a football rivalry between Amsterdam and Eindhoven, I am very happy for PSV, the club from there, that they won. So all the best to them for sure, and they were by far the best. But all that aside, yes, we operate all over the Netherlands, whether it's all the way down south in Brabant, so Eindhoven, or Limburg, all the way up north in Groningen, or one of the islands. We work everywhere. The majority of our the contact that we have with our clients is through video calls anyway. You're always very welcome at the office as well. But yes, we can do anything within the Dutch borders, basically. Yeah.
Does the bank takes into consideration if you pay a rent next to the mortgage payments that you will have, and if this affects the maximum of your mortgage?
Yeah, very good question. The bank doesn't. So basically the consideration is that when you have your own home already and then you buy the new build, then they want to know, okay, sure, can you afford both mortgages? Yeah, so the current mortgage and the new build mortgage. When you have a rental property, then that is not considered for some strange reason. So the bank doesn't. We do, not to say that we cannot secure a mortgage for you, but basically we are your financial advisor. So might sound a bit weird, but we don't really care about banks. We care about you because we're independent from any banks anyway. There's no fee structure or commission or anything. We only have a focus on you. So we want to be sure that when we secure a mortgage for you, that you can pay your rent and the mortgage that is gradually building up throughout the building, that you can afford both costs, of course. So it's no consideration for the bank or the maximum mortgage that you can get, but we will consider it to make sure that you're well off financially and you don't have sleepless nights during the construction of your house. That's basically the most important thing there. Yeah.
And what happens if I decided to sell a newly built after 4 or 5 years? Is it possible, and is it easy to do it?
Yes, it's possible. Yeah, it's also relatively easy to do it. So basically, it's regardless of it being a new build or an existing house. When you have a mortgage on a property and you're the owner of the property, and you want to sell, it's very straight and easy, really. Maybe a bit un-Dutch-like, but it's basically, let's say you have a mortgage for 500,000 euros. 4 years later, you repay the mortgage a bit, so the remaining mortgage is, let's say, 465. And in the meantime, the property value also increased to maybe 510, who knows? So the value, you can sell it for 510, the outstanding mortgage is 465. So that basically means that you have 45,000 euros equity. If you sell it, that's the profit. That's exactly how it works. You sell the house, you don't pay any penalty to the bank, regardless of how long you fix your interest rate for. You don't, only the outstanding debt is repaid, not any interest payments or something. So it's very clean and simple. The 465 will be repaid. 45,000 euros is your profit. It's your own bank account, no capital gains tax, so you don't pay taxes over the profit. That's it. Repay mortgage, profit is yours. Happy days. And how easy it is to sell your house, that depends on the market. But right now, in the current market, if you have a house and you want to sell it, you do this, and it's sold, basically.
Okay, and okay, maybe we can just answer this in short. Does the age benefit also applies 10.5 transfer tax on the land?
So yeah, if you're under 35 and you buy a property for your own use, then you don't pay transfer tax up to 510. So if you're by under 510, you're under 35 years and you buy for yourself, they don't pay transfer tax. The 10.4% doesn't. You do still pay if you buy it for investment purposes. Yeah.
Okay.
So to answer your question, Sazat, no.
Does renting out regulations include short-term ones and, for instance, Airbnb?
It depends on the municipality and the specific property, specific project. Usually yes, but it's worth checking out before you register at a project. Yeah.
And what options for insurances in case in the newly built is not delivered properly, has damage, or how and who is handling that?
That is a very, very good question, Matthias. Thank you. So you have to have an insurance when you buy a new build. Whether you buy a project and it's already arranged, it should already be arranged by the project developer. But also, if you have a house that you have built, you need security. There's a specific insurance for this that makes sure that the building is done. And so if the project developer goes belly up, so they are bankrupt, for instance, then there's this insurance that somebody else, another builder, will then finish building the property for you. So yes, there is definitely insurance for that. And if anything, that's obligated. Yeah.
And what are the expectations for interest rates within 1 or 2 years?
See if I can find my crystal ball somewhere. No, my expectations, I expect them to decrease. Thank you for asking it for the 1 or 2 years, because that's relatively easier to expect. So we expect a decrease and continuous decrease. We see that happening now for the last, at the start of the year, the interest rates were about 0.23% higher than they are right now. So it's a very gradual decrease that we see happening for the next 1 or 2 years. I expect that to continue.
And for example, if a building is delayed, are there any penalties that the builder can ask for additional payments in the material cost rises? Sorry, is there
Yeah,
any
no,
clause that
I understand the question, no worries. Very cool name, by the way, X-Ray. So it can be. Make sure to thoroughly check the contract that you have. So sometimes now, because property, the cost for materials can increase. So for a delay, no, because that's usually due to the developer themselves, and they have built that into their budgeting already. Some builders used to, I see that less happening now, but a couple of years, 2 years ago, when the cost increased of materials, we saw that the builder factors in a potential increase of, let's say, 2 or 5% of the purchase price or the cost price of the materials into the contract. So it can be included. Make sure to have it double checked. Yeah.
For example, if someone owns a property already and wants to buy a new property to live in and sell the old one, how the mortgage and the tax deduction process looks like? Do you pay 2 mortgages at the same time?
Yes, you pay 2 mortgages at the same time. Your new build property mortgage again builds up gradually. You have a tax benefit on both of the mortgages. Yes, for sure. And we can even consider a bridging loan. That's kind of a pre-financing of the expected profit that you make of selling your current home. Definitely possibilities. You have double costs during that period of time. Part of those double costs you can potentially include in your mortgage as well. We'll make sure that in your financial analysis, we'll make sure that you have a clear outline of what that would mean for now, but also for the construction period, of course.
Okay, I have 2 more like personal questions,
Sure.
but I think there are not any other questions coming. Quickly. So if someone secured a mortgage for 10 years and in July the mortgage interest rates go down, is it possible to refinance to a lower rate without penalty?
Yeah, so basically, whenever you have your interest fixed for 10 years, it's fixed for 10 years. Let's say for 3.7% right now. If the interest rate has dropped whenever later on, so you have your mortgages locked for 10 years, you agree to the bank that you pay the 3.7, and the bank says, well, we'll not change your interest rate. If you, at whatever time it is, if it's July now, or if it's in 4 years, you say, I want to have a lower interest rate, then you have to break the contract to benefit from that lower interest rate. Then you pay a penalty to the bank indeed. How high that penalty is depends on how high, what your mortgage amount is, what the difference in interest rate is, and what the remaining interest fixed period is. Because you agree to 10 years. If you, after 3 years, say, now I want to break the contract, the bank will then say, okay, what is our loss of income over the next 7 years? 10 years minus 3, 7 years, and then you pay a penalty over that. What that specific amount is depends on too many variables, but we can discuss that in a personal call to give you an indication there.
And can I move my mortgage interest rate lower one to a newly built property?
Yes, you can. If you already have a mortgage, let's say, again, same example for 10 years, and the current interest rate is 10 years ago, so now it's 2024, let's say you started in 2018. Interest rates were around 2.2%. So then for the remaining interest fixed period, 2018 is 6 years ago, you fix it for 10, so you have 4 more years to go. That means that for the 4 more years, you still have the interest rate at 2.2% over the outstanding mortgage that you have. So yeah, your current contract, you can continue on your new build property. Yeah.
Okay, now I might need some help, but
no worries.
Do mortgages for new bouws built through CPOS collective particular also work similar? I don't know if you can see that message.
Yeah, I can see it from Depti. Thank you, Depti. So CPO is when you joint with other consumers have a property built. Yeah, they work the same way, but you have to comply to the same rulings as well. So it has to be sure that they have to be sure, the bank wants to be sure that the property is finished, and this is done by the insurance to make sure that it's continued being built. So if the developer being the builder, if they go belly up, so when they go bankrupt and they can not continue the building anymore, there has to be insurance in place that the building will be continued by a different party. So there are possibilities, but you have to make sure that all the rules and regulations are in place, basically. Yeah.
So we, of course, going to share the slides in the presentation and with some additional sources, for example, why to invest or buy in a newly built with some blogs. I think this comes from a little bit more personal situation. Does the bridging loan works if I have mortgage in Germany?
Yeah, so that for one, thank you for being so committed and active in the questions. I see it's a personal situation there as well. Schedule a free call of about 15 minutes so we can discuss this. Basically, but I'm willing to answer this question, of course. So a bridging loan only works for properties in the Netherlands. It goes for Dutch banks right now anyway. They only secure mortgages on Dutch banks, Dutch properties in the Netherlands. So when there's a property abroad, even though it's quite close to in Germany, a bridging loan does not work. No.
And the last few questions. I started with a fixed contract last month. When I am eligible to take out a mortgage, do I need to wait 6 months?
No, not necessarily. You can start right away. If you don't have a probation period, and even if you do, there are possibilities too. So kind of depends on a couple of scenarios. But yes, strictly speaking, you can already start a mortgage application. Yeah.
And 2 more last ones. So what happens if material cost increases over the time of the building? Can property builders request more money?
Yeah, we kind of already went over that. So it should be in the contract if that applies. So if it doesn't state in the contract, then they cannot do that. No.
Yeah. I have one question in the Q&A, Robin.
Yeah.
I don't know. The first one from Nicholas.
Yes.
Also,
if the first payment is 50% of the total value, this means that at this point of time, we only pay interest rates over the... No, this works differently. I understand the confusion here, but let me explain how it works with a building deposit. So you buy a new build. You're registered at the new build project. So let's say the purchase price is 500,000 euros all combined. Then, just for the sake of to make the calculation a bit easier, full 500,000 euros will be put in a building deposit. You pay 3.7% interest over that amount, but you also get 3.7%, right? So that cancels each other out administratively. So you don't actually have to do the payment, but administratively you do actually make the payment. So it's cancelled out, cancels each other out. So you do pay it for the consideration of the tax authorities. Therefore, the interest rate of 3.7 that you pay over the 500,000 euros mortgage is completely tax deductible. Or let me say differently, you get how the tax benefit works is you pay a total amount of interest over a year or a month. Then subtracted is own property forfeit. That's a kind of a weird name for weird tax as well. That's where you pay taxes over the pleasure of owning your own home. So basically what I'm saying is part of the interest rate is tax deductible. Interest payments are tax deductible. But that applies on the whole mortgage of 500,000 euros. So even though you only use 50% of your building deposit, you pay interest over the total amount. And you get a tax interest on the building deposit. So no, it doesn't affect it like that. You pay interest over the total loan that you have. Therefore, you have a tax benefit over the total loan as well, regardless of what the credit rate is on the building deposit.
I think we covered it all.
Very good.
And
Very good. Thank you, everybody, for asking all of these questions, because they were specific, and I like the dedication in everything and all the questions that were asked. So very good. This is kind of the end for now. If you have more questions, don't worry. You can always schedule a call using the Q&R code, or just go to our website, mrmortgage.nl. And you can schedule a call there with a big orange button right there, schedule a free call, and then we'll be very happy to explain everything that you might have questions about. Thank you, Egle, for hosting the Q&A. Wonderful, as always. And now I'll move back to Karim. I want to thank all the attendees right now here. I hope you had a very nice lunch during this presentation, or you might have it right now. And enjoy the sunny days and your day off tomorrow.
Thank you all. Thank you very much, Mr. Mortgage Team. Wonderful information. Really appreciate it. Really some valuable stuff there. So thank you very much. Thank you all for attending during your lunch period. Hope you did have something tasty. I will definitely see you in the next webinar. And yeah, like we said, the home ownership, especially new build, is just a few clicks away. So don't hesitate. I will be sending out the recording and the slides afterwards. Thanks so much. Have a wonderful day, everyone. We'll see you in the next webinar.
See ya. Bye, guys.
Bye-bye.